I like how we vibing. 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 I like how we vibing.
This video is sponsored by our channel sponsor, which is 015. You can find them on 015.co.za for some premium web hosting from as little as 45 Rand 90 cents. I mean, 45.90. Think about it. That's not a lot. And you will get some premium domains. And I personally would advise you on getting maybe the Supreme or the Executive packs, because it comes with a lot of benefits and a lot more storage. And you can host multiple websites on one package, you know. And this is, since we are talking businesses and growing your businesses, you can actually get your business registered by them. And there's some benefits, you know. You can get a name reservation, company registration, a certificate, income tax number, and you can even get a free.co.za domain if you pick one of the higher packages, or you can get a free QuickBooks subscription for 3 months. For 3 months. Yo, that's nice. You know, that's really, really nice. And if you want a website, they can actually develop a website for you at a very affordable rate of starting from 2,100, excluding VAT, I think. But it's not a lot. Think about it. 2,100. You spend a lot more on other things. But yeah, and once again, executive plans and supreme plans, you literally get free domains. They, for the first year, they are literally out here trying to win you guys over. Anyway, let's continue with the video. Friday Facts. This week's Friday Facts is related to companies and the reporting requirements. So, yeah, it's going to be a short one because, I mean, it's like there's not a lot one can say about companies and the required reporting. But anyway, let's get started. Let's get started with the types of companies that you can sort of form in South Africa. You get private company, which are owner managed, which most of them, you know them as PTY or SMM. Well, PTYs, mainly those ones are the SMMEs, small companies, you know. Shareholders happen to also be directors. Shareholders are involved in the running of the business on a regular basis. They are very involved in the business. Then you get private company that are not owner managed. This company is also known as PTY Limited. Most companies in South Africa are registered as private companies like that. None or not all shareholders are directors of this company. So basically, let's say you decide to start a company with your wife, and then you are running the day-to-day operations. Your wife, she's got a full-time job. So in that situation, not all shareholders are directors. Some shareholders are not involved in the day-to-day running of the business, you know. Some shareholders, like I said, don't play an active role in the managing of this type of business. Then you get state-owned entities. We all know what state-owned entities are, like Eskom being one of them, SAA being another one. And then you get public companies. Those are the ones that are listed. And then you get non-profit organizations, NPOs, Nelson Mandela Foundation, Trevor Noah Foundation, Chalk Foundation. The list goes on and on and on. But those are some of the types of companies that one will get in South Africa. And let's move on to the types of reports that you would actually have to, well, that you could actually get away with, you know what I mean? You get a compilation or accounting officer report. This report is guided by the engagement that the business and the accountant sign. The report was mainly used by CCs back when CCs were still a thing. They stopped registering CCs, but because they stopped registering CCs and they understand that some businesses, like owner managed businesses, are are going to replace CCs, they sort of took the accounting officer definition and started applying it towards small owner-managed businesses. And it depends on your public interest score, PI score, as well as how your financial statements are prepared. So the compilation or accounting officer reports is for small businesses, and it depends on your small business, because if your PI score is less than 100, then you are considered a small to medium business, Then you get a review report. This is a limited assurance report and is considered an alternative to a full-on audit. So you still get some sort of assurance, but at a fraction of the cost. Most private companies can opt for this one instead of a full audit. Your public interest score, and how your financial statements are prepared will also determine if you qualify for this report or not. Then you get an audit, which is an assurance report. State-owned companies or entities and public companies are required to be audited. Your public interest score and how your financial statements are prepared will determine if you meet the requirement for one of the other reports or this report. This one is like the ultimate report that everybody knows, And let's see what the qualifying criteria are like. So qualifying criteria for compilation or accounting officer report, owner managed with a public interest score of less than 100 and the financial statements are prepared internally, you can get away with doing a compilation or accounting officer report, owner managed public interest company with public interest score below 350 and your financial statements are independently prepared. So let's say you hire an accountant to do that, you can get a compilation accounting officer report. NPOs, depending on the structure of the NPO, because the NPO Act actually does give room for a compilation or an accounting officer report. So, and actually in the Act, it says you need to get an accounting officer's report, I think 6 months or so after your financial year end. Obviously, you'll have to consult with your accountant for that. For a review report, non-owner managed with a PI score less than 100 and the financial statements are internally prepared, you can opt for that. You can opt for a review. Non-owner managed with a PI score less than 350 and the financial statements are independently prepared, you can also opt for a review report, Owner managed with a PI score less than 350, 100 if financial statements are internally prepared. You see, like I said, you can opt for this. It really depends on your PI score. PI score is the most important one. Let me finalize this. Let me talk about the audit report. Then I'll talk about the PI score, because I just keep saying PI score, but I'm not showing you guys how to calculate it. Anyway, the audit report. Any company with a PI score above 350, state-owned entities, public companies, both owner and non-owner managed companies with a PI score between 100 and 350 where the financial statements are prepared internally have to be audited. Also attorneys' trusts, they have to be audited. That's just how it is. So if you are running a law firm and you've got trust accounts, you can't run to your friend who happens to be a business accountant and say, hey, can you review my financial statements? Nope. The Law Society or the LPC requires audited attorneys' trust accounts. That's just how it is. So let's quickly talk about the PI score. So PI score is your public interest score. So for every employee that you have, that's 1 point. For every million that you owe somebody, that is a point. For every million that you make, that is a point. So you see it starts adding up. Let's say you've got 50 employees and let's say 75 employees, and you've made 15 million and you owe 10 million. You're already at 100. There's obviously other things that will start adding up, And the other thing is you will be forced to get audited if you have more than 5 million rand, that you're holding more than 5 million rand on behalf of somebody else as a company, So you will be forced to get audited. There's certain requirements here and there, but you don't always have to be audited. You can literally opt for a compilation report, which will cost you anywhere between 3,000 rand and 5,000 rand, or a review, which will cost you between 3,000 rand and 10,000 rand, depending on who you approach, or an audit. Well, that's obviously a bit pricey, but you can always opt for less. If you are running your business and you've got like 5-10 employees, you're not even making more than 10 million, you don't owe more than 10 million to begin with, you can literally run your whole business and get a compilation or accounting officer's report and still be able to apply for funding. Obviously, different institutions might have different requirements. Some institutions might say, in order for you to apply for funding, we need a full-on audited report. But it's important for you to ask, does it have to be audited? Can it be reviewed? Can it be a compilation? They will have to guide you on that matter, but you don't always have to be audited. Anyway, thank you. Don't forget to follow us on Twitter, the Com Clinic ZA, Instagram, the Compliance Clinic. And yeah, man, peace, love, and prosperity.